Good afternoon, everybody. Welcome to the recap. Once again, I'm Laz, filling in for Scott, the Red Dog Redler. Let's do an around the horn today. We're going to take a look at a couple different symbols, a couple different sectors, just get a kind of an overall broad stroke for the landscape of what is our current market environment. Fairly muted session in the broader indexes. Again, this is the recurring theme since the beginning of the year. We are slowly grinding higher. Grinding is the appropriate word here, as there's really been no major enthusiasm with the broader markets on an intraday basis. Most of the gains have been coming overnight, and we've been seeing some sort of choppy, non-committed direction intraday. It's making it tough for some traders. Again, right now it is a stock picker's tape. It is all about stock selection, stock selection, stock selection. Money has been made, as we've highlighted over the last couple of days, in a lot of stocks that have heavy short interest: Netflix, rare earth symbols, to name a few, GMCR, Sina. Just just a random sort of basket of stocks that have seen some fairly explosive moves. And if you haven't been participating in that arena, it's probably been a very, very difficult trade thus far since the new year. So let's take a look here at the S&Ps. And I covered this in the morning call this morning with Jill. It looks to me on the short term, if we look at right now, we're holding this 8-period MA. This is a very bullish sign for the market. Usually, patterns like this like to break away to the upside before they are done resolving themselves. So we're going to continue to keep an eye on how this works. Even today, we did sell off a little bit intraday. You can see the tail up today. If we look at, let's say, a 15-minute chart or a shorter time frame, you could see the morning started out with an initial thrust down. But once again, that 8-period MA, which comes into play right around down here, acting as support, pushing us back to and closing the day, in and around the highs. So we have to respect the fact that short term we are still being bought in the S&Ps. We do have this downtrend line, which I've put up here to contend with. I'm sure we're going to have that conversation in the not too distant future. This level comes in right around 1315 in the S&Ps, plus or minus. So we'll see what happens to the S&Ps if and when we get up to that price level. And I suspect that could happen on an overnight trade, as that has been the recurring theme, like I said earlier. So we'll keep an eye on the S&Ps and how the price reacts. So let's take sort of a random walk down Wall Street, and let's just look at a mixed bag of symbols, as I think that's really helpful. Last night in the Off the Charts newsletter, we highlighted IBM, possible head and shoulders reversal pattern here. We talked about it also this morning. Flirting with breaking down today, tailing back up, which is a fairly bullish sign, in the fact that the bears definitely tried to push IBM down, but we saw some sort of pushback. But the bottom line here is you have a stock flirting with falling off a potential cliff, and a market that's basically flirting with possibly launching higher. So you have some real relative weakness that has stepped into big cap technology, which is why I like to take a look at IBM. I do think it serves as one of those benchmark stocks, and it has been on a tear for the better part of 2011. We saw new highs in 2011, and towards the latter part of the year, late in the year, we saw some selling. But it looks to me like IBM, we have to be careful here, as this is riding under the 8-period MA here and looking sort of bearish. So keep an eye on IBM and what that tells us going forward. Also looking kind of sick, if you will, is this Amazon. Amazon since October, selling off. Even today, flirting with attempting to break down again. This is not what you want to see. You want to see the stock snap into these averages, which it did. You can see, from the later part of last year and early this year, you want to see it then coil here and then launch higher. And we didn't, this candlestick today changes that. So I think Amazon, again, one of those have-nots, if you will, stocks just underperforming, being sold. If this market does, turn down at some point, you're probably going to see a head for the hills type of trade where you get some sort of panic or enthusiasm to the downside. Again, that's just my opinion right now. Not a healthy looking chart. Apple. Acting brilliantly, very controlled pullback here into an average after a nice run over the last two to 3 weeks. Really, really, really good looking pullback into a rising average. You can see a little bit of a tail up today, tail up yesterday. So buyers trying to step in here and definitely sort of, cherry pick some sort of, pivot here for possibly another leg higher. We did on this run, take out prior 52-week highs, which sat right up here. So we did tail through there. We did flirt with resistance here. It has to be respected for now. I do suspect that, given the stock has earnings, I believe next week you could see another enthusiasm trade higher as the market just continues the love affair here. Netflix, our big short squeeze from last week. A nice controlled 3-bar pullback. Again, tailing up a little bit today. I would keep an eye on this setup. I love these types of trades where you get the pullback into the rising average. Could give you another, trade higher, possibly retest, that 100 mark that it hit later last week. So let's keep an eye on that trade going forward. If we, for those of you looking to buy a dip in Netflix and believe there's more upside here, this is probably a good looking setup that could give us that trade. RIM, junk off the bottom. I love the trade. Catch play here. For those of you that are familiar with the active trader course, we teach this setup. It's called a catch play. Perfect catch play here in RIM. You can see riding into the 8. Now getting that leg up today. This is the same type of trade we saw, even in Netflix. You can see holding the 8 period and then, launching off that 8 period, last week. So RIM looks like it could potentially leg higher. RIM a little late to the game here, but nevertheless could see up into these prior highs, 17.5, probably a realistic target there. Nice setup today in RIM, and got things going a little bit. We were all over that in the VTF this morning. Other symbols that I think need to be watched. Some of the oil stocks, Oxy, tailing down today. Chevron, we talked about in the morning call, gapping down. Closing in the lower end of the range. Very, very questionable trade here. I'm not sure that I would really commit any capital here. Longer term in the Chevron, we talked about, this morning, that 110 level. We go back in time. For the better part of 2011, this is a weekly chart. I can even go to a daily. You can go back and you can see that 110 area, multiple touches in this zone here, finally, going into major resistance now and coming off pretty hard. So let's keep an eye on some of these oil names going forward as they could present some trades lower. Commodities, gold and silver, we'll take a quick snapshot of. Gold, coming back nicely. I wouldn't be a buyer of gold at this level. Definitely snapping back from that sell-off it had last week. Keep an eye on what it does into some sort of upward trend line. Could see some resistance here. You can see these tails, somewhere in this mid to lower 160 area. Could find some selling or some short-term resistance in GLD. Not much enthusiasm in that market right now anyway. Silver, again, not much enthusiasm here. Nice catch play, again, same kind of thing. Catches into the average, and we could see another spike higher here in silver. I think silver might be an interesting looking long at some point in the near future. And natural gas, another thing we talked about this morning. Really just, this stock has been, this ETF, I should say, taken to the woodshed. Big volume surge today, a little bit of a bottoming tail. Could present an opportunity to maybe take a tier 1 long for those of you looking for possible snapback, as this stock has really, really come off pretty hard. I wouldn't put a lot of capital here to work, but definitely something that we could possibly sink our teeth into with a low risk type of trade. If tomorrow, let's say hypothetically, we took out today's highs, you could certainly quantify a long trade against today's lows. So something that, for those of you that like to take that reversion to the mean trade, we call it, possibly, in the UNG right there for a trade, maybe back to fill this gap into the, low to mid 6s, 630 to 650, I'd say would be a good area for a target. Banks, I'll finish with the banks. Goldman Sachs, continuing to leg higher. I do think we could see a trade back to this prior resistance zone into the 105, 106 area. Nothing really in the way to stop it from getting there. Trying to work its way higher. Intraday on Goldman, again, the market sold off, as did Goldman. roaring back and closing, at the high of the day. So a bullish sign there for Goldman as it's trying to, work its way back and come back from the dead. Bank of America, a little bit of a pullback today. We talked about Bank of America. Bank of America has actually been a better trade, in my opinion, from a trading standpoint. A little bit of a pause today. We could see a 2 to 3 day pullback here as the stock has come from 5 to 7 percentage-wise. That's a very large move. So we have to respect the fact that it could consolidate, as I said this morning. Again, just a random walk around Wall Street, looking at a couple different symbols, a couple different sectors, getting a good bird's eye view of where money flow is, and I think that's the theme here. At some point, I think the market will something will shake the tree, and we'll get a little more broader market momentum as the trade has really been a lull for the most part. Not to say there hasn't been opportunity. Like I said, in individual symbols, there has been pockets of opportunity here, pockets of opportunity there, but it's not the kind of market where you can just throw capital, at the broader market or even get short the market here. It's just not that kind of trade right now. There's just not that level of enthusiasm. Interesting note, and I meant to say it this morning and I forgot, with the VIX. Let's take a look at the VIX for a second. Let me bring up the VIX. VIX, right? That's what it is. Nope. VIX. There we go. I meant to say yesterday, and again, I don't know what it means or if there is an interpretation, but yesterday, not today, yesterday, I'll make this nice and big, was the smallest day percentage-wise, again, not actual, dollar-wise or point-wise, but percentage-wise move in the VIX. It was a 1.14% intraday move yesterday. We have not seen anything that small in the VIX since August of 2003. I believe it was August 29th. So really a contraction of volatility, essentially being short volatility there. We saw some, again, selling here. But very interesting. I just wanted to bring that up for those of you that like to follow the VIX and pay attention to volatility on a much closer level. Interesting little factoid there. So again, stock pickers trade, virtual trading floor. I think if you're an intraday trader, short-term trader, the money's being made intraday with, again, certain symbols, random plays in different types of sectors, different types of strategies. So hopefully you're tuning in intraday and you're really capturing some of these trades have been happening on a 1 to 3 day basis. As always, I think I said too much this afternoon. Have a great day trading tomorrow. I'm fried. And I will be back tomorrow to talk to you. Take care.